Hi everyone, welcome. We're here to cover the Super Thursday, Bank of England Super Thursday, and it's going to be quite an interesting day because the UK card just rolled out that the UK government can go or through the Brexit process can trigger the Article 50 without Parliament approval. So pretty interesting journey we have today in the UK. I'm here with Yohay Elam and Mauricio Carrillo. As usual, welcome all. Hi guys, how are you?
Hi, Valeria.
All fine already?
Everything fine. We are waiting for the BoE.
Yeah, we are having action ahead of the event with the pound trading at over a month high or so. But anyway, what are we expecting from the Bank of England, Yohay? What's your take?
Well, I think the court stole the show just a bit because so much action already this morning. But the Bank of England is not expected to change the interest rates and not to change the QE policy. Back in August, when they did introduce their comprehensive package of an interest rate cut from 0.5 to 0.25 and more QE, they hinted that in November, in the next quarterly inflation report, and the next Super Thursday, they will also probably cut rates once again. But since then, we had lots of economic data from the UK, which was positive, including inflation, the Bank of England's target, which went up thanks to the weaker pound. Mark Carney, the governor of the Bank of England, also said that they are not indifferent to the value of the pound. They don't really like the pound falling so much. So expectations now are for no change in their policy. It'll be interesting to watch their forecast in the quarterly inflation report for inflation, for growth, and we'll try to find hints for when or if at all they intend to make any changes to the interest rates. I believe you won't get anything, and that could add to a more bullish stance for the pound, extending the trend maybe just a bit, because I don't know if there's any momentum left after this big move this morning, but we'll have all the data, also the meeting minutes. We're expecting a unanimous vote. So that's it, Super Thursday, rate decision, meeting minutes, and quarterly inflation report, and then a press conference by Mark Carney.
Yeah, I do agree with you that the economy has been quite resilient to the Brexit, despite the gloomy picture Carney painted ahead of the vote, remember? But I was thinking, do you think Carney will acknowledge that? Will acknowledge that he was kind of wrong? I'm not saying completely wrong, because we are analyzing a short-term situation right here. We are just 3 months away from vote. Really, there's a lot ahead over the consequences of breaking with the euro area. But anyway, do you think he will notice that the economy is not doing as bad as he was expecting ahead of the vote? And if so, how will the market react? What a question.
Well, they have to... Sorry?
I kill you with that question.
Well, they have to acknowledge reality first and foremost, so I don't think they can really say that things are bad at the moment. They might say, well, immediate reaction was perhaps not as bad as we expected. The fall of the pound helped exports, things like that. But I think that their forecast for long-term growth will not be changed that much, because Brexit is a big event and less trade is a problem. So I expect only a bit of backtracking. Carney was under heavy political attack, as you hinted. Yeah.
Ahead of the vote,
yeah.
I was watching the pound right before we start, and well, you know, this while we don't know what happened a couple of 3 or 4 weeks ago, plummet. We have different bottoms in different brokers, but anyway, the highest set after that that low was around 124.80, 124.70. So I do believe that that's the first resistance the pair has to face. And if somehow with a hawkish Carney we break through that level, things will get pretty interesting for the pound today, in spite of the huge run we already seen, right?
Yeah, I believe the Bank of England, well, central banks are still important. Yesterday we covered the Fed. We said that this time the Fed is not that important because of the elections. And in this case, I think the Bank of England is still very important. There is a chance, of course, Carney extended his tenure at the Bank of England to the middle of 2019 to sort of oversee the Brexit process, to be in charge while Brexit is happening. But now, with this court ruling, with the big debate in Parliament, perhaps, we might have, I still believe we'll have Brexit. People did say their word, but it might take longer, and there will also be questions about his future, which will also have an impact. So I do expect more action from the pound. Happy to see some volatility.
Okay, I was thinking also, you said the court still the show, and yesterday we have pretty much the same happening in the US, now that you mentioned the Fed, with US elections still in the show, the Fed's show, right? So indeed, central banks remain important for me also, but these days things are getting a bit wild and volatility out of political rights rather than central banks, right? So anyway, what do you expect the euro can react through to the pound's rally? It's clear that it's having an inverse effect, right, in the short term, mostly due to action going on in the euro pound, right? But do you believe the euro can erase all of those gains and go back below 110? Or we will have tomorrow payrolls?
Yeah, we have tomorrow's payrolls, and we have the US elections. I think opinion polls, things related to Europe are not having a big impact. We had earlier the Eurozone unemployment rate. I didn't see any impact from that. So it's all about, the US elections and also the NFP. But so for euro dollar, it's I see it was rejected at this line of resistance.
Yeah.
And maybe it'll stay in range until we have the NFP, or we have later today the ISM, non-manufacturing PMI, so that could also have some impact.
Yeah, we are seeing a weaker dollar, but it's clear that this latest rally in euro dollar is not about euro strength, right? It's about dollar weakness. So if the dollar got strong again, the risk is towards downside, and it will be big for me, because actually I don't see a real reason for the euro or for the common currency to be in this bullish run. There's nothing that really supports the fact. Yeah, I know we have slightly upward revisions yesterday in the manufacturing sector, showing that maybe the economy has started to pick up in October, but I don't believe that that's enough, mostly because we are talking of the ECB trying to extend its stimulus program beyond March 2017 in this near December meeting, right? Indeed, I guess the market is waiting for December and central banks. Then that's will be much more relevant than whatever we are having this week from central banks, I mean. But anyway, for me, the euro has an immediate support in the 1050, 1060 region. So if we lost that level, the pair can go back towards 110, 110.10. That's my next bearish target. And below that, back to 950 region, where it has been feeling comfortable for most of the past week. And on the other hand, if we take that 1125, which is today's high, we can go up to 1160. But honestly, I'm expecting the pair to cool down in the American session, unless we have new polls, headlines coming from the US, and wait for the payrolls, right?
Yeah, well, the chances of a Clinton win, the polls are most important. I just refreshed it. I agree with what you said. I'll just add that now it's around 2/3 chance for Clinton, 1/3 for Trump. And it's very close according to this aggregate of polls. It's a margin of 3% for Hillary Clinton. So that's very, very, very tight. And the big question is, has this trend ended? I mean, are things going to stabilize from now, and this will help the US dollar, or is it going to get worse? Are we going to see 50-50 or even a chance for Trump to win? And that would get markets even more spooked. And the best currency to gain from that would be the Japanese yen, the safe haven currency.
I'm listening to you. Anyway, we have when do we have the results? Do you know of the U.S. elections? Meaning they will vote next Thursday. And what? Sorry.
First results will come out at 12 GMT, midnight GMT.
Okay. So Asian session Wednesday will be.
Yeah, I will not sleep all night, probably.
Okay.
Here we go. Bank of England's rate decision.
Yeah, here we are. Sorry, guys.
No change. No change. Interest rate remains 0.25.
Yeah.
See the voting pattern. Unanimous vote. No change in policy. Everybody agreed. Everybody's with Carney.
Okay, there we go. Pound trying to break higher. Oh, there it is. Fresh daily highs.
Yeah.
We're heading toward for 70, 80 the most. Pierre has already run a good bunch of pips today, so don't expect way too much. Well, let's take a look at the statement and forecast. Okay.
Yeah.
It says GDP for the fourth quarter at 0.4% rises its 2016 forecast to 2.2. Somehow, Carney acknowledging he was too negative when he forecast the Brexit result. Pound heading towards the resistance level we mentioned earlier. And I will check for further. Okay, the forecast also rose. Yes, the inflation forecast, right? 2.7% for 2017, and also 2.7% for 2018. Strong upward revisions in inflation for the upcoming 2 years.
Unlike better forecasts mean lower chance of a rate cut.
Yeah. There we go with the pound rising. Okay. Government has no intention of letting court rule the rain regarding the Article 50 for Brexit in March. Okay, we have another issue there for the UK. A battle going on in the background of the Bank of England.
Yeah, all in all, a very good day for the pound.
Yeah.
I would say across the board, gaining nicely against the yen, against the euro, against the dollar.
Yeah, the poor euro is paying the price.
Yeah.
Back to 1060 region. If upcoming. I'm sorry, go.
No, in theory, the euro should have suffered because of the court ruling, because if there is a delay or no Brexit, if it's good for the UK, it's also good for the EU. But it seems that the pound today is on its own.
It's that's what I want to say. It's playing a different game of the rest of the market. However, well, it's waiting on crosses, and that's why we're seeing the euro and the yen weakening modestly against the greenback. I was thinking that we have ahead U.S. Services and composite PMIs, right? So I do believe that if those came better than expected, the dollar can find a bit more of support. Not against the pound, of course. Not the day to sell a pound today.
Another interesting thing that, of course, they removed their note that they're going to cut rates, probably cut rates later in the year, and they even said that rates could go either way. So,
okay, yeah.
Either way means even a rate hike. I don't believe that will happen, but
not the perfect time for a hike in UK.
Yeah, so this tells us forget about a rate cut anytime soon, and that's of course not positive.
Yeah, I was thinking that before the Fed rose the rates for the first time, for the first time. Remember, we were discussing the possibility of the UK being the second economy entering into the tightening path. Remember that times?
And all Brexit.
Yeah, hello Brexit, and here we are. Record lows, fresh cut, more easing, higher inflation, the economy growing, and the government fighting to leave the euro area. That's why I usually don't like market so long term, because this kind of stuff you can never forecast. That's why I'm a happy intraday trader. But of course, it's something that it's something personal. I mean, you can do whatever you want, however you feel comfortable. I don't know. It's just it has too many possibilities, the forex market. Anyway, the dollar Japanese. I was watching the dollar Japanese yen recovering above 103, cheering that small bottom. Let me show you. Here we are, daily charts. The pair reached its 100 simple moving average and bounced it. The bounce is still shallow. You know, guys, it's still not something too relevant. But the fact that the pair has met support or met buying interest around that level, it's quite relevant for the trend. Of course, the dollar Japanese yen will probably wait for payrolls before gaining some directional momentum, a bit stronger directional momentum. But the fact that it's holding above this moving average is, for me, interesting and supports an upward continuation in days to come, right? It has broken above it at the beginning of October and has, after being below it since late January, early February, I'm not quite sure, but anyway, multiple months below the moving averages and now above it, and the moving average holding. Of course, if we close the day below that, I do believe that the risk then turns back towards downside and the pair can go back to 100, but so far so good.
And do you see the pair going down below 100? Any possibility or not?
Not really. Not really, because I'm thinking that the possibility of a US rate hike in December, and therefore that will prevent the pair from breaking that much lower. Unless, of course, the US stays on hold next December, that will be bad news for this pair in particular.
And they left the door open yesterday for not hike, right? Or they weren't that bullish, that hawkish in the decision for December.
Sorry,
Valeria?
in fact, I do believe that yesterday's they reinforced the case for a December hike, but of course without confirming it, right?
Okay.
What do you? They didn't give us the same smoking gun like they did in October last year, when they basically told us in the next meeting we're going to raise rates unless a huge disaster happens. They think they're also a bit afraid of Trump, and the data hasn't been also that, powerful. It looks okay, good enough for another small hike of 25 basis points from a low level, but not.
Yeah, I agree that that's the question. Data has been so not good, not extremely good, not extremely bad. No, but well, Overall, employment it's okay, inflation it's okay, so I'm expecting them to act. They have to act. We are going to die waiting if not.
Yeah.
And I'm watching the gold, Valeria, in your chart. It's testing that red line is 200.
Sorry, which pair?
Red gold.
Gold. Give me a second. That's the 20 simple moving average in the 4-hour charts.
Okay.
Yeah, it's pulling back from that 1308 level we reached yesterday. Still lacking definitions. Remember, we talked about this yesterday, that the rally having little support fundamentally because there's not a real reason for gold to rally that much, considering that the US is on the path of tightening rates. But anyway, the risk-averse environment ahead of the elections, well, it's doing this with gold prices. Still, if the price keeps moving lower, and if we have a good payroll tomorrow, back to 1250.
And what are the expectations for tomorrow? Yohay?
For tomorrow?
Yeah,
lots of echo. Tomorrow expectations are for 175,000 jobs gained and rise in wages of 0.3% month over month. I think that less than that could be good enough for keeping December in the air. And of course, what the Fed will not say is that if Clinton wins, it's more of the same. That means they can indeed raise rates. And if Trump is elected, the amount of uncertainty in markets will mean that they'll probably postpone it to the far future.
Expectations are of a slight improvement, in fact, right? Not much in it from previous month's reading, meaning nothing really shocking at this point.
Yeah, last month it was 156 before revisions. The big revision in the ADP implies maybe we'll also now have a good revision for September, and that should be also helpful. If we get sort of a mediocre headline figure for October, so I think I said yesterday we'd need maybe under 100,000 to really hit the dollar hard, or above 300,000 to really boost the US dollar. But the elections remain the biggest focus of the markets at the moment.
Okay, cool.
Well, except the pound, which
yeah, the pound
life of its own.
Yeah, the pound is doing something else. It's advancing above those post-wild slump highs. Okay, let me change. There we are, above this high, 24.77. So, as I said, there's scope for a test of the 25.30, 25.40 region, but I'm not willing to risk that much at these levels, considering that the pair has added over 140, 150 pips already today, right?
Yeah. Very, very good day. I'll add only that this trio of positive things for the pound. The third thing has been the services PMI, which in normal days has a big impact. It came out much better than expected at 54.5. Of course, markets were waiting for the court ruling, which was also good, and the BoE, which was also good. So it's all rule Britannia today.
Yeah. You'll see it's quite flat.
Yeah, sí, sí. Yeah. Okay, Yohay, let's do a recap on what was the forecast and the decision of the Bank of England. If you have what they...
Yeah, the Bank of
Yeah, go
Sorry?
ahead. Go ahead, sorry.
The Bank of England left all its policy measures unchanged and unanimously, means an interest rate of 0.25 and QE program totaling £435 billion. That was not a big surprise, but the inflation report was much more hawkish than expected. They, of course, raised forecasts, acknowledging reality that the economy is doing better. That was a small thing, but they also said that rates could go either way. That means beforehand they forecast a cut in rates, and now they hint that they can even go up. Again, nobody expects them to go up, but unless something really crazy happens, but at least there's no rate cut on the horizon for quite some time, and that's of course positive for the pound, extending the positive trend. Began with the services PMI, began earlier with the weakness of the US dollar, and of course got a big boost by the court ruling that put a wrench, I would say, in the wheels of the government's desire to trigger Article 50 to leave the European Union on its own. Things will have to go through Parliament, or if an appeal is successful.
That or it's terrible.
Yeah, but anyway, what's clear is that things are more complicated. It's not a straightforward path to Brexit. I believe we will have Brexit. The people said there were. The UK is a strong democracy, but it's going to be. It might be delayed. So, and the market likes when bad things are delayed. So everything works today towards is helping the pound today.
Okay. Ahora, what was the reaction in the market, Valeria?
Well, the pound has been reacting positively. Mostly, I believe that to early news, we have dollar weakness as of yesterday, pushing the pair to fresh 3-week highs, and better than expected PMI figures. Services won earlier today, and the court ruling delay in the Brexit have helped the pound, to advance further. The Bank of England, with its hawkish stance, with those reviews Yohay mentioned, and the fact that they kept their economic policy and change, and both unanimously throughout it, are resulting in the pound trading near 25. To be honest, I do believe that this is temporal strength. I still believe that the long-term perspective is bearish for the pound because of the too many risks related to Brexit and how the rest of the euro area will respond to whatever the UK may want, right? Because we know that the UK want to remain within the single market, or at least try to have a special deal there, and the rest of the European countries are not willing to give that. So in the long run, the risk is toward the downside. Anyway, the pair is now bullish, and there are no technical signs suggesting the contrary. So we'll probably keep on running in spite of the rest of the market reaction during the upcoming couple of sessions.
Okay, thank you, Valeria. So let's move on tomorrow's event that is now from payroll. What we can expect in terms of market, Valeria?
Well, to be honest, payroll has been moving little compared to, I don't know, a year ago, because despite the flip-flops we have in the headline figures, the fact is that the U.S. Employment sector is doing more than okay, right? And the unemployment rate is around 5%, 4.9. I think it's really in line with Fed expectations. The economy keeps growing, creating jobs. Again, the key are salaries, because we need higher salaries to boost inflation, to see the people spending more, right? We have a great spending figure, by the way, this week. But anyway, if the reading of it's above expected, well above expected, and we have a strong advance in wage, I could see the dollar rallying back, particularly against the euro and the yen. Anyway, the market will be a bit cautious with elections next Tuesday, but overall, I would expect some dollar strength if we have a solid report tomorrow. If we don't, panic will rule, and there we go back to sell the greenback. Okay.
And Yohay, what is your
terrible job report is not only does not only lots of echo.
Sorry, I didn't hear you properly.
Yeah, I said that a very bad jobs report has two implications. First, for the Fed, it means in absolute terms that there is less of a case for a rate hike. The case will be weakening instead of strengthening. And also, it also has political implications because Donald Trump could take advantage of weak data saying that the economy isn't doing well under Obama, and Clinton runs on sort of the third term of Obama. Well, she's then from the incumbent party. So, but I believe it'll really need to be a terrible, terrible disaster, not just a small miss. And I mean, 150 will be great, even if it's below 175 expected. Reality is, of course, based forecast. He's doing better. That was
okay. Okay, thank you. So, guys.
Getting closer to 125 on pound dollar.
Yeah.
Yeah.
The only way is up.
Okay.
And 24.94 is the high so far.
Yeah, but it's going. It has no aims to give up, right?
Yeah, it's really everything is going towards the pound today.
Yeah, maybe a strong US September report can help the pair gains. I'm not sure.